All right. Well, good morning, everyone. This is exciting. Welcome to Innovation Bay's first ever live virtual event. We've had over 700 registrations. So we know that people are joining us from all across Australia, New Zealand, and in fact the world. So we want to say a huge thank you to you all, and really hope that you and your families are keeping well. And that really, we want to start by acknowledging that, this is a pretty tough time that we're, extraordinary time that we're all living through. It's been challenging for each and every one of us. So, we will try and bring us all together. Most of us here are running or working in startups. I guess in many ways we're used to risk and uncertainty. That is the sort of default for it. But I don't think many of us have experienced that situation. So fear, that's really why more than ever it's important to come together to support each other, to help and learn from each other, so we can navigate this this moment and come out the other side as we will, stronger than ever. For those that don't know or are new to Innovation Bay, welcome. For those that are familiar with us, welcome back. I'm Ian Gardner. I'm your host this morning and co-founder of Innovation Bay along with Faden Stow. I'm also a VC. I'm an investment partner at Gelix Ventures. We also have Shan, our general manager, and Claire, our events manager on the team, and in fact on the call too. We're all here to support startups on their journey from idea to IPO and beyond. We've been doing this for over 17 years. That's how old we are. And we do this through events, community, and content. It's focused on helping people learn, connect, and grow with each other. Like everyone, we're learning to how to operate in this new reality. Currently adapting our offerings and thinking of new ways to support startups. So we expect to see more programs like this and some new initiatives coming in the coming weeks. And I mean, if you haven't seen it, do check out our podcast, Open the Pod Bay Doors. That comes out pretty much weekly. So we couldn't do this, any of this, without the support of our sponsors. So I do want to say a big thank you to them. So KPMG High Growth Ventures, Macquarie Bank, AWS, and our newest national sponsor has just come on, IAG Pharmark Ventures. All of them do amazing and fantastic work to support the startup ecosystem, and they're doing even more during this time. So we really do encourage you to check out their services and products. So just before I introduce today's panel, and we'll kick things off, I just want to let you know how we're going to run this session. Anyone that knows me, I can ask questions all day. So I'm going to start and try and be relatively restrained. I've got 20 minutes or so of questions that are prepared. And then it'll be over to you. So 30 minutes of questions from you to the team. We do have the chat function running. So down at the bottom of the screen, you'll see the chat. Yes, all I'd say about the chat is just be nice, be sensible. We're not going to take questions from inside the chat. There's a separate Q&A button down there, so use that one. Thanks also to everyone who submitted a question during the registration process. We're happy to make that into these questions. So right now, let's meet the panel. Just click stop here. So panel, welcome.
Thank you.
Maybe I'll just one at a time, just get you to say hi and wave so we know who you all are. So Paul Bassat from SquarePeg.
Morning, everyone.
We've got Rick Baker from Blackbird.
Hello.
Michelle Deeker from One Ventures.
Hi, everyone.
And Craig Blair from Airtree.
Hi there.
Yeah, we can see Paul and Craig are trying to look intelligent by having lots of books in the background. So we like that. So yeah, part of the reason we assembled this panel, I think between you control almost $2 billion of funds under management. You're pretty experienced. That's not to say that you're pretty old, but you have been through a lot. You've come through a couple of other economic crises in, I think, 2001, 2008, and survived to tell the tales on the other side. I'm not sure any of you remember the 1970s oil shock, but I hope not. So I think it's a good chance for us to share your experience leading and helping companies through this crisis. So, all right, let's kick off. I'll probably take it one at a time. So, Paul, I might just start with you. I'm going to ask each of you this question before the other question, but the emotional side. I mean, it's a tough time for everyone. How are you? How are your teams feeling? And then the specific question for you, Paul. What should startups be doing right now?
Yeah, thanks, Ian. I mean, firstly, thanks for asking. Doing okay. This is a really, really tough time, and all of us are anxious, and I'm certainly not immune from that, and our team's not immune from that, and everyone's doing incredibly well and pulling together and supporting portfolio companies and supporting people in the community, and I guess everyone's doing our best, and that applies to, I think, everyone in the community. Thanks to you. I think this is an amazing initiative, so thanks to you and the Innovation Bay team. This is absolutely brilliant. Look, this is an incredibly hard time. This is the greatest, healthcare crisis of our lifetimes. It's probably going to be the greatest economic crisis of our lifetimes. And so, I have unbelievable empathy. So many people are going through really, really, really difficult times on so many dimensions. And there's obviously a lot of people here who run businesses or are leaders in their business. And I think, first and foremost, it's obviously safety first. And I think we've seen, particularly within the tech community, people move, not just startups, but established businesses as well. People move incredibly quickly to focus first and foremost on safety for their teams. And so I think that obviously is above all other things. Secondly, really important, leaders need to lead and show care, show empathy. It's important in times like this not to kind of be, we've all probably seen that sketch from, or certainly I have, given my age, Monty Python and the Holy Grail, and the arm gets chopped off and the other arm and the leg, and the guy says, just a flesh wound. It's not a flesh wound. So we need to be open and honest, but we also don't need to panic. We need to find the right balance as leaders, but calm leadership, empathy is really, really important. The other thing I guess for me is, Andy Grove talked about only the paranoid survive. My take on that at the moment is only the paranoid will survive, and only the bold will thrive. Probably at the moment it's time mainly for paranoia, and when you're doing your forecasts and when you're making assumptions about how things are going to look over the next few months, it's best to take more worst case type scenarios rather than best case type scenarios. Cash is king. You've got to get through this period. You've got to survive this period. But those businesses get through. You've got to make sure you can come out the other side thriving. And there's going to be a time where you tweak a little bit from 80% paranoia and 20% boldness, maybe the other way around. And so really, really thinking about surviving the short term, and that is first and foremost, but also making sure that you come out the other side with an opportunity to build a very, very significant business when this crisis comes to an end.
All right, Paul, thank you. I think there's some good words of advice there. And I think you did actually publicly write a letter to all your portfolio. So it's probably worth checking. Is that on your website?
Yeah, it's on our blog, and we shared it with the entire community. And I think, I wrote it we wrote it 3 weeks ago. I think that the message is broadly right, but to some extent it's probably already dated, and we'll send another message to startups. Things are changing so quickly. Yeah. And we'll send another message to our portfolio in the next few days. But I've been blown away by the leadership our portfolio has shown, and other startups across Australia and the region. It is extraordinary.
All right, Paul, thank you. Craig, I'll maybe jump to you next. First of all, same question. How are you? How are your teams? How are your portfolio? And then I guess a specific question for you. What impact do you think this is going to have on the startup investment climate specifically?
Yeah, thank you for asking as well. This is the toughest economic and health crisis that I've seen in my short lifetime. I'm relatively fine, I think, and our team are relatively fine. I think in times like this, we need to show our experience and calmness and empathy, but also be grateful for what we do have. And so I think we keep reminding ourselves of that, both at a fund level and a portfolio level, a country level. But I joke, I go into my office here every day now. It's like an ICU ward, just trying to sort of help founders go through and triage and help and support and coach, as I'm sure everyone else on the panel's doing. In terms of what we're seeing in the investment crisis, as you said, I've lived through 2 of these before, once as a founder in the .com crash and the second as an investor and VC investor at 2008. I think there's some similarities. I think we're going to see just, non-traditional funders pull out of the market. These CVCs, corporate venture capital firms, family offices, private equity, hedge funds are already retreating back to their core investment area. You're going to see existing funds divert capital to support their current portfolio, which is obviously the right thing to do. So there's no question you're going to see funding decline. It already had declined 20% in the first quarter of this year. It's going to come down to, who knows what it's going to be the second quarter. It's going to be another big drop. So, I think rounds are going to be delayed, deferred, and to Paul's point and everyone's point, I think it's all about extending runway, buying time, so you can come out the other side of this crisis. I think the differences with the last two downturns is that they were caused by structural problems, either in the sort of the dot-com craziness or the capital markets in 2008. And this time there's an argument that if we can find a way out of this kind of mess, that and you can focus on your core fundamentals, you can clearly figure out the value proposition, your product differentiation, you can slingshot out of the back of this with a really strong opportunity. So I think that's something we're keeping in mind when we're talking about survival, but slingshotting out of this downturn with a really strong product.
Craig, there was one group of investors you didn't mention there, so I'll just stick with you quickly on this, but you didn't mention angel investors. So what's your feeling as to how they're feeling about this and what we're going to see there?
Yeah, it's a good question. We are still seeing a lot of seed activity. In fact, we wrote 2 seed term sheets last 2 weeks. So I think in terms of seed investments, in terms of angel investors in those rounds, we haven't seen much activity there. So I guess anecdotally, I'm seeing people probably sitting on their hands and probably pulling out for a little while, just watching what the market's going to do.
Yeah. All right. Look, thank you, Craig. Michelle, we'll jump to you. So again, first question, like, how are you? How are your teams? How's your portfolio? And then your specific question is, look, what sectors are going to be more impacted than others? I mean, we've seen the impact on hospitality in particular. I mean, that's just horrible out there. It's bloodbath. But there are winners. The delivery companies, the Zooms of the world. So who are we going to? Who's doing well, and what sectors are being impacted?
Yeah, thanks, Ian. First of all, I really feel for all the people out there, and thank you for dialing in, and thanks to Innovation Bay for the event. Everybody is adjusting to a new world reality, and I actually liken it a bit to, in my generation, we've never really been through a semi-war situation, and we're almost in one in some ways, working with our portfolio company to work out how we come through this and get out the other side. And first and foremost, we focused on the health and well-being of us and our portfolio company staff, looking at, COVID policies and procedures and, business continuity, which I think is really important for all startups as well. How do you do that in a new world environment? And then just remember to be kind to each other, because we are in difficult times, is another thing I would say. But people have been fairly unsettled because we are charting new waters. Just in terms of the sectors and segments where we're seeing opportunity, of course, the electronic businesses are really going through the roof at the moment, because everyone's setting up working from home. Work tools and supports, so Zoom and Slack, and companies like, our own portfolio company, Employment Hero, who are also doing a lot of outreach into the community, saying we have tools to help support your business when you're in this, new state. Online education is another area where we've seen people taking advantage and talking to the government about new services that they can provide. Then, of course, you've got fulfillment and delivery, online exercise programs. We all need to suddenly work out from home. So, it's actually, as startup entrepreneurs, start thinking about also how you could facilitate some service into this new world economy. Some of the other things we're seeing is telehealth. Suddenly the government is allowing telehealth services to be charged to Medicare, which they weren't before. So we're seeing new businesses taking advantage of that. Online media is also another area. And sadly, and then of course all the consumer staples, we really, understand what we really need in times like these and what we really don't need. And so it's sort of playing into what people really do need, their basic needs. Tourism and travel's obviously being decimated, and hospitality as well. So the events sectors, sports, You know, broadcast TV has lost an awful lot of their business. So a lot of traditional companies, I think we're going to come out of this and see the world looking a little bit different out the other side, because we're also going to change behaviour. And we're going to think a lot more about how we source services, how we meet and greet, how we work together, I think is really going to change. And people who take advantage of the changing environment are actually going to be able to come out with great new business initiative. And I agree with the comment I think Craig made about slingshotting out the other side. I think if you start prepping your marketplace now, even if you can't sign the customer, but you do things that seed your market, when the market returns, you'll be, you know, at the forefront. And we all know that there are big winners out of every downturn, and that technology and healthcare ultimately often end up being the winners. So if you can be a survivor through this period, you may come out as the leader in your own category, and there is an opportunity there for that.
All right, I love that that upbeat assessment overall. So thank you, Michelle. Rick, I'll jump to you. So again, look, same question. Like, how are you? How are your teams? How's the portfolio? And then your specific question. I mean, like, you have lived through the last two downturns. I mean, we talked about 01 and the financial crisis that many of us will remember, but maybe not have experienced. What lessons have come out from those crises that we think we can apply here?
Great. Look, thanks for having me, and thank you everyone for joining. Look, you know, firstly, how are we feeling at Blackbird? Look, we're doing pretty well. Obviously, you know, we're a business that can work remotely. We're still learning to work remotely. We're a pretty optimistic bunch, but our optimism is being bashed around. We held actually an offsite, virtual offsite yesterday. I can thoroughly recommend it to everyone out there. We spent half a day. It's pulled together by our head of community, Joel, who I know is listening. So hats off to him, but really got our team together. We focused on culture. We did a session on a whiteboard session on a tool called Miro, where we looked at our goals, and everyone got to play with sticky notes and move them all around, and kind of had little sticky note wars with each other. And it was actually just a really heartwarming day to get the team together. I think one of the things of working remotely is really just trying to keep that sense of connection within your team while you're all sitting at home. And
that sounds like a tool. What's that tool called? Miro?
Miro, M-I-R-O. Yeah,
guys.
It's a fun tool, and was really useful for us too. But you know, some of our team are sitting with their families and their pets, and that's great. And some are sitting alone in apartments, and that's a lot harder. So working hard to keep everyone connected, I guess. Look, you know, lessons from the last two downturns are always sort of hard to sort of pick. There's you know, potentially so many, but I picked two just to focus on today. And the first one's a bit of a doom and gloom one. Second one, hopefully a little more glass half full and upbeat. And the first one is I want to make it clear to everyone that private markets lag public markets in their decline. And I mean this in a sense of two ways. Firstly, in terms of pricing, and secondly, in terms of the amount of capital available for investing. And so I pulled sort of the data on the amount of capital that was invested from VC into startups kind of over the periods of the last two downturns that we had. So the financial crisis in 2008, and before that, the dot-com bust. And I think the truth that everyone has to know is that it takes time to get to the bottom of the level of amount of funds that are invested into companies. So in the 2008 crisis, it had little to do with tech and VC, but it took 4 quarters from Lehman's going down in mid-September 2008 to reach the bottom of the amount invested in VC in a quarter. So that decline in the amount invested into startups kept going down for 4 quarters. So it was a year before we got to the bottom of that market. And that market at that bottom lasted 2 quarters before it began to rise again. In the 2000 dot-com bust, obviously VC and tech was right at the center of that bust. And I guess for many, the reason that it happened. And that it took almost 2 years for VC to hit the bottom of its investing amount. And that lasted for 3 quarters before it started to tick up again. And sort of why did this happen? You know, VC funds have lots of capital remaining in their funds. Right now, we're lucky as a VC industry around the world, not only in Australia. We've come off some record quarters of fundraising for VC over the last few quarters. And so VCs should have decent amounts of capital left to support their best companies. But VCs are going to have to be far more careful. We're very much, you know, having to think about what are the new companies we invest in, how much do we reserve for our existing companies, how much capital will they need to go through. So everyone's being careful, but there's still capital in the system right now. My worry is that in 12 months, most of the VCs will have invested that dry powdered capital, and it'll actually be even harder in 12 months to raise capital than it is now. And so I don't want to be too doom and gloom, but I want everyone to kind of understand that, you know, the message out there is if you think fundraising's now, it's probably going to be harder in the next year, in a year's time. And the thing that worries me a little bit is lots of companies are thinking, well, I've got 12 months runway, so I'm going to be fine. This will all be over by then. And of course, I totally agree with the others. I'm really, really hoping that this is a slingshot. We get a vaccine, or we control the virus, and we come roaring out of it at the other side. But I'm kind of nervous just planning for that. And so what does it mean? I think it means raise now if you can, while there's still capital in the system. I think it's look at scenarios that push your runway out further than probably makes you feel comfortable. Look at options. There's a really nice matrix that Sequoia Capital put up. It's on their blog, that sort of tries to simply, you know, force you to think about some of the worst scenarios. And then, you know, the idea is being, I guess, planning some way, if possible, for pushing that runway out towards 2 years rather than 1 year. Yeah. You know, and I could be wrong here, it could all come roaring back, but that's what I'm worried about. On the positive side, and I'll be quick here, is that a lot of the really great companies were either founded or in the early parts of their lives during a big downturn. You know, PayPal, Google, Facebook in the .com or the after the .com crash, Uber, Airbnb, Square, Stripe out of the GFC. You know, why? There's less competition, there's less noise, there's less competition for talent, for digital marketing. There's larger companies pulling back to their core products. And so what does it mean? You know, it means survive at all costs. You know, survival is often not just the best companies, those that adapt the best to the situation. Really focus on what your core value is to customers. Focus on building that core product that's super valuable. Get rid of all that, you know, side stuff or great ideas that you wanted to try, and really focus on the core. Survive, and then, you know, come out strong at the other side. Thanks.
All right, that's perfect. Thank you, Rick. All right, so look, I mean, it's kind of on that theme. I mean, like all of you, I think Paul in particular, with that, you know, maybe more public letter that's gone out recently to the portfolio, are giving your portfolio and I guess startups in general some advice here. So, I mean, the question really is, how are you protecting your portfolio? But I guess, I mean, that cascades through to, you know, I guess top tips for survival, if we want to be brutal about it, for other startups. So, but Paul, maybe I'll just jump back to you on this one to start.
Yeah. Look, I think there's a few aspects, and I think, you know, Michelle, Craig, Rick talked about a lot of these themes in their answer, and I think covered it really, really well. You know, I think for a lot of our portfolio companies, they've been relatively lucky that they've raised pretty large sums of money in the last 6-9 months. So quite a few of those a lot of those have cash throughs of 2-3 years, and potentially indefinitely. And I think to Rick's point, we shouldn't assume at this point that things will bounce back quickly. They may not. We don't know, but history would suggest that they're less likely to than not. All of us, and I'm sure it's the same everyone on this panel, is spending an incredible amount of time with our portfolio, you know, daily, multiple calls a week, chatting through issues. But I would say by and large, you know, I think the bulk of our portfolio companies, they have been really, really laser focused on what this means and made changes quickly. We've seen founders with companies that have very, very large cash balances take personal salary reductions, sometimes 50% or more, even though probably it isn't strictly necessary. They've tried to cut costs, but again, in a way that's minimising the impact on individuals. And so we're really, I guess what we're doing with our portfolios is working through, I think there's three things to look at. One is short-term impact on business. Secondly, long-term impact on business. And thirdly, cash. And probably cash takes precedence at the moment for obvious reasons, and everyone's talked to that. And so really, really understanding is what does that cash position look like over the next 3, 6, 12, 15, 18 months based on a whole range of different scenarios, and being, as I mentioned earlier, being pretty gloomy in terms of what those scenarios are, because you are not going to look back and say, look, if things were a bit better than I expected, that'll be fine. If things are worse than you expected, that may be existential for business. So number one, really, really focus on cash and continually updating that, watching it closely, and bearing in mind that $1 spent on something unnecessary today is not $1 that you can get back unless you're able to raise capital. Secondly, what are the short-term impacts on business? And for most companies, the short-term impacts are negative, from some mildly negative through to disastrously negative if you're in travel or hospitality, or that's where your customers are, etc. Some are having, obviously, the Spotifys of the world, the Zooms of the world, and actually there are the Pelotons of the world. It's actually positive for those companies. But then most importantly, understanding what the long-term implications are. And for a lot of businesses that operate digitally, where we're going to, and that certainly was our experience at Seek. The greatest, and I think it talked to Rick's point, I mean, we started in late 1997, so we went through that dot-com boom, that dot-com crash. The greatest period of value creation at Seek was between about 2000 and 2002. Our competitors either disappeared or went backwards. We were able to bring in some amazing people into the business. Costs of acquisition of job seekers and clients was a whole lot less. So it was an amazing period of value creation, but the way our business was valued basically didn't change. In 2000, before the dot-com crash, people thought our business was worth about $100 million. When we raised money in 2003, 3 years later, we're profitable, making about $12 million EBITDA a year. Our business was still worth $100 million. We raised money at that point, it was a little bit more than $100 million. So basically, nothing had happened in terms of the way our company was valued in a 3-year period, even though huge value is created. By 2007, Seek had gone from being worth $100 million to being worth $3 or $4 billion. And a lot of that value creation, that was our valuation on the ASX. A lot of that valuation process occurred between 2000 and 2003, even though it wasn't reflected in the way external parties valued our company.
Yeah. Punchline really is that whatever you do, get through this, and if you come out the other side, you're going to be
100% survival, and then focus. Once your survival is assured, focus on the long term. But at the moment, when we're going down like this and we have no idea how long it'll last and how deep it'll be, all of us, all entrepreneurs are pathologically optimistic, and I certainly was guilty of that. Really, really try to temper your natural optimistic tendencies. It's not all doom and gloom, but don't assume that in a month's time we're all going to move back to the world as it was, because that is highly unlikely.
Yeah. All right, look, we're over 20 minutes, and I want to make sure that we get to the Q&A. So there are quite a few questions coming in, so thanks everyone for doing that. Let me jump to one. I mean, I think it's a little bit linked to that, but I think that's good because I think this is an important topic, and I think it'd be good to hear the other panelists' perspective. So should we be pulling back on all spending, including product development, to survive the next 3 months? That's from Shannon Gilliland. And it's kind of linked actually to another question I saw here, which is, how should we be thinking about cash runway? I mean, is 6 to 12 months the perspective, or a bit longer? So really just, these tangible things around the levers you've got on spend, and I guess specifically product development. So who wants to take that one?
Maybe I could just kick off, Ian. Just on the R&D spend side, and how we're working with many of our portfolio that have big R&D expenditure, just to focus on the core things that are absolutely necessary to create the biggest value inflection points in your business down the track. So if you've got R&D programs across a number of different areas, just say, what is the one thing that's really going to, or two maybe that are going to give me the biggest ROI, and focus on that. And then you work out what cash do you require for that. In terms of cash runway, we're telling everyone to try and work out how this is going to be 2 years. We're pretty focused on that. Some of our companies can't quite get there. We're also looking at, some short-term bridging rounds for companies where we're getting all the investors around the table to come together and put in money to give them that longer capital runway, so that they can, survive through this period and out the other side, from a point of view of strength.
Okay. Craig, Rick, want to jump on this one?
Yeah, I'd just add it's a matrix of amount of cash you have, and progress that you think you can make, or things that you think you can put off that don't kill the business. I think right now, it's not 6 months runway. It is absolutely with Michelle. A lot of our companies that have 18 months of runway on their plan, I'm saying, guys, I want to see scenarios out to 2 years to be really confident. I think really, push yourself to think about scenarios that cut more deeply than you would like. And I think the reason for doing that is you may not choose that option, but at least you've thought about it and you've considered it, and you've decided, based on knowing all the different options.
Jump in quickly, Rick. I mean, this is, it feels like it's coming from a perspective of, which it is, a VC that's already invested in a, relatively high performing, because, the bar for all four of you to make an investment in any startup is very high, so that they've already got team, product, revenue, well, in most cases. But what about for the startups out there that are much earlier, that, only have sort of, weeks or months of cash in the bank? I just want to make sure that we're covering that perspective as well. So sorry, keep going, but if we can just keep an eye to that point.
Yeah. So obviously, I'm talking about those that have cash and have raised, and I think, it's, a lot of companies are in the situation where they probably have 6 to 8 months runway, and that's kind of normal, right? They were thinking they'd raise towards the end of the year. For that kind of company, I'd say, be thinking now about what you can do to push that runway out. Go out to your investors and see if there are ways to raise, bridge rounds at this point, as I do think there's a little bit of capital still in the system at the moment, and it's still possible to raise, and you should be out there pushing to do that, because I think if things get worse, that capital will dry out. For those that just have a few months left and have no revenues, really, again, step one is go and see if you can raise a little bit of capital from your existing investors. Again, get in early before all their other companies jump in. And I guess by saying that, I kind of defeat the purpose, because everyone jumps in, because it's, it's going to be tough over the, I think over in 6 months' time to raise capital.
I think it's worth emphasizing as well. I mean, we're not exactly sure, the impact of or the details on many of these things, but the government has announced a huge amount of stimulus to come into the economy, and a lot of that stuff will be available to startups and to this group. And I'm thinking here the debt facility. I mean, look, we've been saying to our portfolio, just whatever you do what it takes to get your hands on cash right now, because that's the currency that's going to keep you going. How long will this take? What's the other side look like? Not sure, but if you don't have cash to get through it, then it's going to be hard. So, make sure you're across all the initiatives that are coming, and it's changing day by day, week by week. So just stay across that. Craig, have you got any perspective on this one, cost reduction? And nobody's actually focused on that question around product development and how much of an eye to the future you should be having here.
Yeah, I was going to bring that up. I think that's good. I think the way that we would think about it is it's a three-way matrix. You can imagine that. I think this applies to venture-backed businesses and non-venture-backed businesses. I think there's runway, which I think has been talked about very well by the other panelists. I think there's this balance sheet element of how much can you shore up the balance sheet through, it may not be VC money, it could be government stimulus, it could be bringing forward R&D tax credits, it could be whatever you can to get your hand on some cash to bolster your balance sheet. And I think the third one is this product kind of element. Like what are the, I think nothing spawns creativity more than scarcity. So now is the time to really have the hard questions about which part of your product is the killer app and which part of it's a Swiss Army knife, which is kind of 6 out of 10. So I think it's an answer. There's no one answer. There's no single answer. I think each business has its own optimal outcome here. And you've got to work all three things. I think the other point that I'd make on the runway is Paul made the point well that we're all born, well, most of us are born optimists, and that can count against us in these dark times. But I think the other point is just decision-making matrix is the risk of getting it wrong is an asymmetric decision. You know, if you get it wrong, you're too conservative. It's okay, you can fix that. If you get it wrong and you're not conservative enough, you don't live to sort of tell another tale. So I think for those who are optimists but just mathematic guys, you can get girls, you can get your head around that. Mathematically, you're better off to be conservative and fix it on the upside than the other way around.
Yeah. Can I just add one thing? I think because obviously it's a pretty tough, pretty gloomy message, and hopefully a really honest and objective message from all of us. Firstly, as the others mentioned, there is some capital available. It's a lot less than it was, but we're investing. Craig, Michelle, Rick is investing. There's some angel money. It's less than it was, and obviously a lot of it's allocated to our existing portfolio companies, but there is some money out there. I think the other thing to bear in mind is, the one thing Australian companies over the last 10 or 15 years have had to be unbelievably good at is building incredible businesses with capital scarcity. It's not something folks in the Bay Area know how to do. They haven't done it for 50 years or 40 years. If we think about some of the greatest Australian companies, I mean, clearly Atlassian is probably one of, certainly the greatest company Australia's produced in the last 30 or 40 years, and one of the great companies globally. Did not raise a cent of external capital. The first money that came in many years later was secondary. It wasn't primary capital. Another great Melbourne company, Invato, a campaign monitor in Sutherland Shire. These are great multi-billion-dollar companies that never ever raised a cent of capital. And so, A, there is a little bit of money available, but less than there was. We've got to be really honest about that. B, you can build an amazing business by being creative, by being innovative, by thinking differently. And this is a time where the best entrepreneurs, and we've seen this in our portfolio, the companies that we thought were the best run companies in our portfolio, the leadership they've shown in the last 6 weeks has blown us away. They haven't been learning from us. We've been learning from them. It has been quite remarkable and quite inspiring. And this is where great leaders really, really stand out.
Without wanting to pick on you here, Paul, but I mean, you don't have to name names, but a specific example of that sort of type of behavior that you've been impressed with?
I think firstly being really, really clear-headed about where we're at and focusing and understanding exactly where we're at and how difficult it'll be, showing real leadership within the team and communicating to the team very openly, very honestly, very calmly. Making decisions, and I'll call out one of our portfolio companies, Climasol, which is Israeli founders, ex-pilots, special forces soldiers. They know how to deal with crises. They have a lot. I'm not sure it's public, but they have 2 or 3 years of money in the bank based on their burn before making any changes. And their founders basically cut their salary. I hope they don't mind me saying this, but their founders cut their personal salary in half as the first thing they did. It wasn't a big salary. And so that's an example of real leadership. We saw Property Guru onto it early. Airwallex, Jack from Airwallex we were talking in January saying you need to talk to the government. I mean, not only were they doing things in the business, but Jack was messaging me and calling me urgently saying, you've got to talk to the government. You've got to talk to the health ministry. You've got to talk to the prime minister. You've got to talk to the treasurer. This is a looming catastrophe. Australia needs to get onto this. And so they were also doing things in their business. So we've seen remarkable leadership, and it's been really inspiring for us. And so I think one of the good things that come out of a very, very, very difficult situation for everyone is just we see the best in people, both in terms of their empathy, but also in terms of their leadership and creativity and innovation. It is really, really inspiring.
Yeah, no.
Just to pick that up, Ian, I think just to give some other examples of where we've seen that operate at its best, I won't name companies, but some companies saw this coming 3 weeks ago on a Friday. We all sent out similar notes to our portfolio companies. Before they even got that note on Friday, they saw it coming. Weekend, they'd done a planning session. Monday, they were working through scenario A, B, C, D, and that was leaders had taken salary cuts. They'd had 4 or 5 products on the run. They were focusing 1 or 2. It was a clarity of thought, the speed of decision making, and that sort of community sort of empathetic leadership that you see shining through. It's pretty inspiring stuff.
All right, let's jump on to another. I'm trying to pick questions that I've not been, because we've covered so much ground here. So most of the questions are fairly specific, but I think they cross over. This one is from an anonymous audience member. So during this pandemic, when do you think is a good time to, number 1, trial a new product, number 2, pivot the business, number 3, hibernate the business, and number 4, shut down the business? So yeah, it's kind of consequential outcome there. So who wants to take that? Rick.
Gosh, thanks. Throw me in the deep end. Okay, so well, let's start with the worst case: shut down the business. Obviously, we all know we are, as directors of companies, all very cognizant of trading insolvent, and I think everyone has to be super wary of that, because I'm sure there will be some leeway cut, in as the fallout of this happens. But as things stand at the moment, you are liable if you trade insolvent. So I would say be super careful of that. If you do have to shut businesses down, I think understand that it's not the end of the world. Businesses do get shut down every day, and you really, from a mental point of view in Australia, we are so worried about that sort of failure. But it's if done in the right way, certainly from an investor point of view, this is investors know that there are the risk of this happening. And I think, people just need to work through this in a sort of unemotional and fashion. So, that will happen and to a bunch of companies. And I think we have to face that. Look, shutting down and hibernating, I've seen lots of founders go through this, even in times when, when we weren't in a crisis situation, of really hunkering down, almost running out of capital, keeping it going because they had a spark of an idea, really cutting the team right back to the core, talking to the team about working for either vastly reduced salaries or sometimes no salaries for a while. And obviously that's tough in the situation we're in now, but I have seen companies, continue their product and come out the other side. At that point, look, pivoting's hard at this stage, but there are lots of interesting kind of maybe service opportunities that have popped up. The simple example of restaurants moving to takeaway and delivery, and gin distilleries turning to hand sanitizer. There are lots of interesting. I think Paul said it, the creativity of this moment. Be super creative, get the team together, think about how you might be able to create some revenue out of this, and you may even get a wonderful new business idea out of the back of this. It's absolutely possible as well.
Yeah. All right, let's take another one. Should we still be hiring? Again, this is anonymous. Should we still be hiring talent if the right person comes along, or should we freeze hiring and see what happens? So, Craig, I might start with you, but also keen to hear Michelle's perspective on this, because I think Airtree is it Airtree that you've done the who's hiring? So there's a sort of open source place out there. So yeah, do you want to touch on that, Craig?
Yeah, I think it's maybe a couple of points. So one is I think this is fairly doom and gloom sort of tone here, but I think there would probably be about 20% of our businesses that are all doing better than they were 3 months ago. If you're in cybersecurity or you're telemedicine, online education, there's some of these businesses are doing 2-3x what they were 2 months ago. So that clearly those people are hiring like crazy, can't get enough people. Online pet delivery, so
pet food.
Pet food delivery, sorry, yeah. And the initiative was just trying to figure out a way to share job opportunities around the community, around all of our communities. So I encourage everyone to jump in there, so that there are people who are sadly making the gut-wrenching decision to let people go, and there are other people on the equation looking to hire people and can't get enough people. So that's one equation. And in terms of should you hire people, I think this comes back to it really depends. I mean, I've had I think for the companies that are not seeing better times, there is definitely hiring freezes. We're looking through every single head count and reconsidering whether we need that person. In others, we've made the decision we really do need those 2-3 extra engineers because we feel like we're onto something in this product development that we need to keep investing in, and yeah, we can hire 2 engineers in this area, but maybe cut out and 2 people on a growth area. So I think it's not all things for all cases.
And where can we find this this magical resource with all the jobs?
It's out there. It's on Twitter. It's out there on our socials and our website, and everyone can feed into that platform and list jobs that they're either letting people go or looking for people and trying to make life a little easier for these people.
Okay, Michelle, any perspective on this? Like when hire, when fire?
Yeah, so first of all, I'd say, try to maintain the talent you've got. So think about if you're a business that's actually coming under financial stress, start thinking about, first of all, get rid of the bottom 10% that you probably should have let go anyway, that aren't performing. It's a good time to clean that up. But then look at ways that you can keep your talent. So a lot of companies are reducing the number of days in the week so that they can keep talent. So they might be moving to 4 days a week, this month, and 3 days a week next month, so that hopefully if things improve, they've got their talent still within the company. And obviously it's a case by case for each business. If you need a key role and you've got the capital to do it and you've done your worst case scenario and you believe you can do that. And one of the points about the worst case scenario is we've often told our companies what you think is the worst case, take 30% off that. And start taking that as your worst case, so that they really understand what their capital runway could look like before you make a new hire decision. So a lot of companies that I know are actually on hiring freezes unless they're playing into the pandemic new world at the moment.
Michelle, I mean, like One Ventures has got somewhat of a reputation for taking bets on medtech, or I mean, you've got a few of the almost medical focused startups in your portfolio. So how are they looking at life at the moment? Are they actually hiring?
Yeah, some of our med techs are well capitalized and hiring. And actually, interestingly, we're getting a lot of inbound inquiry about healthcare investing at the moment. So I think it's really focused the mind in that sort of segment. Some of our companies are actually looking at the opportunity that their product may actually be able to support what comes out of the coronavirus situation, because there's going to be ongoing health problems in the community post-event. Others of them are actually seeing structural problems that are impeding their businesses now, and we're trying to work out how to work through that. And that can be things like hospitals aren't going to run clinical trials at the moment because, they're going to be focused on critical healthcare services and not doing anything extraneous. So we're actually, like all my peers, for every single one of our companies, we're planning with the management what this is going to look like and what we can effectively do during this time of crisis to come out the other side.
Yeah. All right. Thank you. We've still got time for a few more. So here's one from Darren Miller. I presume that's Darren Miller from Arena. So hi, Darren. Do you think this pandemic will change the way startups and their boards assess risk in the future? And what do you think the other big life-changing risks are that we should be more focused on?
I think it's a great question. I think there's a lot of people in this call who probably have never seen a downturn. So I think to use one example, I think there was a time in the first sort of 10 to 15 years of the internet where if you got capital, you took it because you just didn't want to lock it away and get on with building the business. I think you might find founders just want to try and not take capital for granted and lock funds up and get in and put it to work. I think the other point is just got to focus on unit economics and core fundamentals of a product, understanding the value proposition. I don't think we haven't been as bad as the US. We've had to survive. We had to spell unit economics before they were even speaking about it in the US. But I think that you'll see a return to those areas as well. But the final point is, as investors, as board, we're all taking 10-year bets. We're taking 10-year bets on individuals who are trying to transform an industry. That's not going to change. It's how you get there. So the belief that you can transform and upturn industries and make life difficult for incumbents through software, I think from our perspective still remains. And so I think, I hope to see that for a long while.
I think just to add to Craig's point, our job as VCs is not looking for what can go wrong, it's looking for what can go right. And so when we assess a company, we think about what is the likelihood they can build a successful business, and if they do, how big could this business be? What does this look like in success? And so nothing's going to change in that sense. Number two, I think it's a good reminder for all of us. A number of people over the last, people, very smart people, very experienced people, have said to me over the last 6-12 months, we don't need to worry about this year because we know Trump is going to do everything he can to get re-elected, and so he's going to ensure markets are strong. I mean, it was a remarkably stupid comment at the time. It's an even stupider comment now. In 2007, 2008, we didn't know it was going to be subprime mortgages. And in 2020, we certainly didn't know it was going to be a pandemic. So risk can come from everywhere. And this is obviously an absolute big one, and it's not just all around. But as an entrepreneur, focus on what the opportunity is. I think Michelle made this point really well earlier. There's a lot of opportunities that are going to emerge. So the great thing about entrepreneurs is they're creative, they're innovative, they look for opportunities. And then the last thing is that the focus, the mantra long term around growth hasn't changed. What I would say is that perhaps I think it's changed a bit, even if it in the last 6 months back the other way, but it had been too much in the last few years, growth at all costs. You have to have profitable growth. That doesn't mean that a business should be or will be profitable from day one. But the thing about tech companies is the best ones are highly, highly scalable. And so it may well be that as your early days, you're going to be losing money. And then as you scale, you become very, very profitable. But let's not go with the buy.com business model. Those of you who are old enough to remember, back in the 2000s, they were a competitor to Amazon. People put them on a par with Amazon. They were selling books at zero or selling product at zero gross margin, and they were making it up on the volume. And for those of you who don't realize that I'm joking, I am joking, but that was seriously what people are thinking, is they'd make it up on the volume. If you're losing money every single time you add a new customer, if your unit economics are negative, then the more customers you have, the more money you're going to lose. That is not a sustainable business in any environment. And hopefully that was clear 6 months ago, but it's certainly clear today.
Okay, look, thank you. Look, we've got probably 5 minutes or so, so I want to keep focused on the more upbeat questions, make sure that we finish on somewhat of a high. So there's one here from Matt Allen. So, hey, Meta. Quite a few startups operating, and I think we've touched on this, the industries that are being really impacted, travel, events, hospitality, for example. It's clear that once we come out the other side, and we touched on it before, if you come out and you survive, you're in a good spot. So what do you think the investment appetite is going to be, given that in the industries that are being most impacted now, like travel and events and hospitality? So I don't know who wants to take that one.
Look, I can start by just saying that, you go through these crises and everyone thinks the world is going to end, or this industry is going to end. We'll come out of this and everyone will start traveling again, and everyone will go on holidays, and everyone will need to travel for work. In fact, they'll probably need to do more of it in the beginning, or want to do more of it in the beginning. So I do think we were, even the worst hit industries are valuable industries for our society and will continue on. It's how, which of those businesses in those industries can survive this and then come out the other end. So the tough thing is, again, for startups, because startups are not profitable businesses in most cases, it's about just hanging in there. But I really think these are valuable areas. All of these hard hit industries will be coming back.
Let's assume.
Can I just add?
Sorry.
Paul first.
So one sort of vignette that might give some sort of positivity and maybe wrap some of the sort of threads together. we talked about here. My first startup was an online travel company when the planes hit the World Trade Center. Not a great time to be working in travel, I can tell you. So the market declined by 50%. We had to let 50 people go. We spent, gut-wrenching decisions overnight. Our revenue declined, but not by anywhere near as 50%. But we came out, we were a profitable business after 6 months. To your point, we had strong economics. When we added customers, we were making money. A lot of the incumbents fell by the wayside. A lot of our competitors in the online world fell by the wayside who didn't have strong fundamentals. And we were able to sell that business for an outcome that worked for everybody. So I think that just shows you the agility, the opportunity that these crises can show, even in shitty industries like travel.
Yeah.
Yeah.
Well,
Can I just add it? There are 400 or so people on this call. I reckon there is at least 1 or 2 people who are going to found the next Atlassian, and we're not going to know that for the next 5 or 10 or 15 years. There's some people here who are going to found the next Canva. There are some people on this call, who are going to found the next Airwallex, the next Athena. And so, we should, and I think it's really just consistent with what Rick was saying, is the world, we're going to bounce back, but actually a bunch of things are going to be different. And maybe the most successful businesses are those that emerge out of this crisis, whether they're companies that already exist today or companies that are really just an idea, are people who are going to take a great different idea about how the world will be different. There are some things that won't be different at all. We will bounce back and go back to normal. I think there are a lot of things that will be different, and people thinking, being creative around what those things are and what those opportunities are. I'd love 5 years from now, 10 years from now, someone to send all of us maybe around this group of 400 people and sort of say, hey, you know what, it was actually in March 2020 where I came up with my idea, and 10 years later, I've got a business that employs 5,000 Australians, is the best in the world at what it does, and it really, really took advantage of a point in time and an inspiration and a vision. And let's use this as an opportunity to really, really build the next generation of great Australian technology companies.
Yeah, no, I totally agree with that. So Michelle, I want to leave the last word with you. Again, on as much of an upbeat note as you can. There was a specific question I'll maybe link that request for last comment to, which is from Emma LaRusso, just about overseas markets and the opportunity there, even around the exchange rate arbitrage at the moment. So yeah, if you want to just maybe wrap up with some positivity, and I don't know whether you can link that into the global market perspective.
Look, one thing I will say is one of our portfolio companies did a big licensing deal in US dollars, and we've been watching the Aussie dollar, and when everyone else has been moaning that it's falling, we've been cheering that it's falling, because we're about to receive that payment for the company. But there are opportunities to sell your company in foreign currencies as well when the Aussie is low, and you can end up better off than where you were. So that's something to be mindful of. You can also if you raise capital offshore, that has a bigger impact back here at home, in terms of your ability to hire and get the benefit of that foreign exchange currency. And, just in terms of operating in foreign markets, that's become a little bit more difficult for some of our companies, but start thinking creatively about, can you source some local people on the ground there that can help your business continue to move forward when you can't, send your own team, up into Asia or across into the US while the travel restrictions are in place. But just be creative about how you do business. Also, just another point I wanted to make, sort of on an upbeat one, entrepreneurs are super, super creative, as Paul's been saying, but start thinking creatively about your own business. See if some of your customers will pay you in advance to help you through this, cash crunch period. Look at all the various grant programs. Think about how, maybe new models for your business in terms of how you receive funds that come into your business. So if you haven't been on a subscription model before, think about anything as a service, subscription as a service. You may find people are willing to pay a smaller price point to access your service.
Yeah.
So be a bit creative about your business models and how you operate, and hopefully that, and keep positive and think about what the opportunity looks like on the other side, because you will come through if you plan now and you really work forward with that plan. So good luck, everybody.
All right, look, thank you. But we are on 9 o'clock, and I want to make sure that we are finishing on time. I think genuinely we could probably go on for quite a long time. I think there's plenty in the call that would probably like us to, but we are going to call it here. So I just wanted to thank all the panelists. There's just a few sort of housekeeping notes before we go, and then I'll do a sort of final thank you. So I mentioned at the start, Innovation Bay is, we are, creating new services to support founders during this time. Part of that is to try and understand the sentiment out there. So, I mean, I know that, there's survey fatigue out there, and I'm sorry to ask you to do this, but it is super important. It's a really simple survey. We're going to share it with the community and probably keep that as a regular update. So we'll try and do this regularly. We're also going to share it with the government. So the link is on your screen. So it's bit.ly/IB COVID-19. So check that out, and we will share that. We're going to be hosting more virtual events like this in the coming weeks. We've probably got one next week with a group of founders, so keep your eyes peeled on that. Yeah, so that's going to be at the same time, same place. We haven't finalized the panel, but assuming that we get some good feedback on this one, which we hope we do, then we will definitely be doing that. We've got applications open, so there's a renewable energy event, which is probably likely in June. So that's with ARENA, so the Australian Renewable Energy Agency. So if you're in the renewable sector, and I suspect that's one that should be still doing okay in this, and we all still need energy, and it's better to be focused on the good stuff. We're also hosting a virtual event with X15 Ventures. So X15 they're looking to empower Australia's innovators to reshape banking as we know it. So pretty big ambition, which we love. So if that's you, or you just want to find out more, please come along. There's an event on the 23rd of April. So put that in your diary. It's all the details for that are on the Innovation Bay website. I mentioned this at the start, but if you are looking for a new podcast, we are doing this regularly. One of the good things about being virtual, fortunately I just bought the fancy new podcast gear and a nice microphone, so we're all good. I don't need the 2 microphones at the moment, so we're relying on the other side. But do check out our weekly deep dive. It's called Open the Pod Bay Doors. Here's some of the recent guests. So Jodie Fox, Sally Ann Williams, Hannah Field, our very own Rick Baker. That was an awesome podcast. And we've just released a new episode, I think this morning, with Toby Norton-Smith, who's from X15 Ventures, as we mentioned. Thank you again. I really want to call out, at times like this, it's wonderful for the community and us to get support from our sponsors. So KPMG's High Growth Ventures team, Macquarie Bank, AWS, and Farmark Ventures. I think that is it. So, yeah, I'll maybe just switch back so that you can say goodbye to the panel. But look, thank you, everyone. I really appreciate your time out the diary. Paul, Rick, Craig, Michelle, hang in there. I think we'll all come through this the other side. Audience, thank you all for joining. And again, emphasize, stay safe, stay healthy, and for God's sake, stay inside. We've all got responsibility here to lead by example. So let's keep this thing in check, ride the storm, and we'll all come out the other side much healthier and happier. So thank you very much.
Thanks everyone. Great job.
Take care, everyone.
See you all.